An economic recession is a significant decline in economic activity that lasts for an extended period of time, typically measured in months or even years. Ever wondered why some people get even richer after a recession? How do they stay calm when there's panic? What do they know that we don't? That's what I'll be talking about in this video. Investors can potentially make money during a recession, although it often requires a different approach than during periods of economic expansion. When there's panic and blood in the streets, that's when millionaires and billionaires are made. Most people are afraid of recessions, but intelligent investors see it as a major opportunity. Fear can make normal people sell their share in a good company, thinking that it's gonna go down, whereas intelligent investors know that the company will still bounce back after the panic. They take this opportunity to buy up even more shares for themselves at a much cheaper price. That's how they ended up richer after the recession. Now let's get to the main point of this video. I'm gonna be showing you how you can also be making money when people are panicking in the streets. Here are some strategies that investors may consider when trying to navigate and potentially profit from a recession. Number 1, let's start with long-term investing. While it may be tempting to make short-term moves during a recession, long-term investors often benefit from staying the course and avoiding emotional reactions to market fluctuations. Historically, markets have eventually recovered from recessions and continued to grow over the long run. Time in the market beats timing the market. You are better off looking for safe and stable companies that you invest in for the long term. This means you have to do some research and look very keenly into a company's finances before putting your money into it. Once you are very confident about the performance of your company, you won't be overcome by fear when everyone is selling their stock just because of panic. As a matter of fact, you should actually be buying. And I'm not saying that all your investments should be for the long term. If you've got some appetite for risk, you can also invest in new and emerging technologies you believe will grow over time. Number 2, we have short selling. Experienced investors may employ short selling strategies during a recession. Short selling involves borrowing and selling a security with the expectation that its price will decline. If the price falls as anticipated, the investor can buy the security back at a lower price, returning it to the lender and pocketing the difference as profit. You can go short on overpriced companies you predict will be going down. The more the stock of that company goes down, the more money you make while shorting. The good thing is, during a recession, you have a variety of options for shorting the market. But also equally important, you need to know when to get out of a short position. Number 3, we have dividend stocks. Dividend-paying stocks can provide a source of income during a recession. Companies that have a history of paying and increasing dividends may still do so, providing investors with regular payouts, even when the stock market is volatile. Number 4, we have defensive stocks. Investors may shift their portfolios toward defensive stocks, which are typically found in industries that are less sensitive to economic downturns. These industries include utilities, healthcare, consumer staples, e.g., companies producing essential goods like food and household products, and certain telecommunications companies. These sectors tend to be more stable because people continue to consume their products and services even in a recession. Number 5, we have bonds. Investors often turn to bonds during recessions because they are generally considered safer investments than stocks. High-quality government bonds, municipal bonds, and corporate bonds with strong credit ratings can offer stability and income through interest payments. Number 6, we have precious metals. Precious metals like gold and silver are sometimes seen as safe haven investments during economic uncertainty. Their prices can rise when investors seek refuge from volatile stock markets and currency devaluation. Number 7, we have inverse exchange-traded funds. Exchange-traded funds that are designed to move inversely to the performance of specific indices or sectors can be used to profit from market declines. These inverse exchange-traded funds aim to increase in value when the underlying index or sector decreases. Point number 8, we have diversification and risk management. A key strategy for investors during a recession is to maintain a diversified portfolio that includes a mix of asset classes and investments. Diversification helps spread risk and reduce exposure to any single asset or sector. Risk management and setting stop-loss orders can also protect investments during volatile times. Last but not least, we have cash and liquidity. Keeping a portion of your portfolio in cash or highly liquid assets can provide flexibility to take advantage of investment opportunities that may arise during a recession, such as buying undervalued assets. During a recession, key indicators of economic health such as gross domestic product, GDP, employment, investment, and consumer spending often contract or stagnate. One of the central features of a recession is a sustained decrease in the country's GDP, which represents the total value of goods and services produced within a nation's borders. This decline can be caused by a variety of factors, including reduced consumer spending, decreased business investment, and a drop in exports. Recessions typically lead to a rise in unemployment as businesses cut back on hiring or lay off workers to cope with reduced demand for their products and services. High unemployment rates can have a cascading effect on the overall economy as it reduces consumer spending further. Consumers often become more cautious during a recession, leading to a decrease in their spending on non-essential goods and services. This drop in consumer spending can contribute to a downward economic spiral. Businesses may delay or cancel investments in new equipment, facilities, or expansion during a recession due to uncertainty about future demand and profitability. This can have long-term implications for economic growth. Banks and financial institutions may become more cautious about lending during a recession, which can make it harder for individuals and businesses to access credit for investments or daily operations. Stock markets often experience significant declines during a recession as investors become more risk-averse and anticipate lower corporate profits. Governments may implement various fiscal and monetary policies to mitigate the effects of a recession. These measures can include tax cuts, increased government spending, and changes in interest rates by central banks. Recessions can vary in terms of their duration and severity. Some are relatively short-lived and mild, while others can be prolonged and severe, leading to a deeper economic crisis. It's important to note that investing during a recession carries risks, and there are no guarantees of making a profit. Market conditions can be highly unpredictable, and the right strategy depends on individual financial goals, risk tolerance, and time horizon. Investors should consider seeking advice from financial professionals and conducting thorough research before making investment decisions, especially during economic downturns. Recessions can be triggered by various factors, including financial crises, external shocks, e.g., natural disasters or geopolitical events, and imbalances in the economy. Economists and policymakers closely monitor economic indicators and employ various strategies to manage and mitigate the impact of recessions, aiming to promote economic recovery and stability. I hope you enjoyed the video. Don't forget to hit that like button if you find this video helpful. And if you have any questions or suggestions, also leave them in the comments section below and tell me what video you'd like to see me do next. I'd love to hear from you. Goodbye.